Welcome to everybody. So we are going to start with the webinar. And first, let me introduce the first speaker. He is Alan Lewis. He is the GLEC Director at Smart Face Center. And before he starts speaking, let me explain that you will receive an email with a brief questionnaire after the webinar. And once you fill this questionnaire and send it back to us, you will receive a certificate of attendance in a few days. So thank you very much for attending the meeting. And now, Alan, if you are ready, we can start. Yeah.
Thank you, Beatrice. Good morning, everybody. I'm going to provide a background to logistics, emissions, accounting and reporting, linked to the work that we've been doing in the LEARN project, and also linked to the work of the GLEC, the Global Logistics Emissions Council, which I lead on behalf of Smart Freight Centre. The background is that the demand for freight transport is growing and is forecast to grow significantly further to 2050. Current projections are for around a tripling of freight transport demand measured in ton kilometres. A lot of that is driven by further global trade as economic development increases in currently developing countries. So additional trade lanes opening up, particularly driving increases in maritime transport at an international level, although also with then consequent increases in domestic and regional trade by road and rail. The impact of that is that currently freight transport emissions are estimated to comprise around 7% of total greenhouse gas emissions. And the forecast is that by 2050, on a business as usual projection, that would increase by around 76% in absolute terms. But actually, freight transport is already under the spotlight because it is an unusual economic sector in that it is continually increasing in terms of emissions because of this globalization trend, whereas for many other sectors now there is a feeling that peak emissions have been reached, and actually the trend is now downwards at global level. So more and more people are beginning to pay attention to transport and freight transport and say, well, what is this sector doing to actually put it under pressure and reduce the emissions? And the modelling suggests that actually for the logistics sector to do its bit and to help stay within either the 2 degree or the 1.5 degree climate scenarios linked to the Paris Agreement, then total emissions would need to decrease by either 19% or 64% on an annual basis. And what that would actually mean is that if the projections about growth in the sector are correct, then the intensity reductions need to be somewhere between 50 and 80% in terms of emissions per ton kilometre, which is obviously a drastic step change reduction in emissions, and will require strong action either at company level or as a result of global policies. And it's because of this that both governments and large companies are coming under pressure. And there are various different ways in which this is shown, not only the Paris Agreement, but the Sustainable Development Goals that have been developed recently have a specific climate element that would be relevant, as well as the growth of voluntary reporting platforms like CDP and others. And the impact for the logistics sector is, even if you don't necessarily buy into that, the impacts of climate change are being seen. For example, extreme weather events and flooding will make it increasingly difficult to actually operate freight transport services when these events occur. And so there is an imperative to take action purely to ensure that business as usual activities can continue unaffected. Now, freight transport is very much a business-to-business activity. Transport activity occurs because there is demand for it from customers who want to buy products and from companies who produce those products. They need to be linked together, and that is actually clearly where the demand happens. The vehicles don't travel just for the sake of traveling. That means that actually business decisions and the interaction between those who provide the service and their customers is important. Procurement power for environmentally enhanced services and longer-term collaboration in terms of investment in technologies or approaches to reduce emissions lie at the heart of this. And one of the key questions is whether business can collectively make that sort of step change in emissions intensity occur on its own, or whether or not it requires external pressure in the form of regulation or legislation to occur. Within the LEARN project, our mission really has been that we believe that businesses that calculate emissions have the opportunity to make informed decisions about their future strategy. And it gives them the opportunity to think about actually how they improve their efficiency. And so, as well as reducing emissions, that itself will lead to increased competitiveness, both in terms of reduced costs, but also an improved image to their customers, as well as managing the risk to their business, not only in terms of helping to mitigate the issues around extreme weather events and the consequences, but also maybe reducing the risk of the impact of legislation on their business, or making them better prepared for legislation compared to competitors who don't take this issue seriously. There is clearly a direct link between emissions and fuel consumption, and then cost to business, because emissions are directly related between the amount of fuel consumed and a fuel combustion factor that is a matter of chemistry for any individual fuel, which is burned as part of the process. But there is actually clearly a worse scenario of that, because at least if you're burning the fuel to make your vehicle move, it is doing something useful. But you also have the risk of emissions as a result of gas leakage, whether that's gas used as a motive power, or potentially leakage of refrigerants, where actually that gas leakage is not even performing a useful purpose, but it's still costing you money to refresh it. The issue of image and risk management in logistics has been around for a while. We have some examples here at a company level. Big logistics providers who have identified carbon emissions and reducing them as part of a service, something that they can actually market and potentially sell to their more environmentally aware customers. There are initiatives that are run through national governments, so Objective CO2 being a French government-sponsored program, and the well-known US EPA Smart Waste scheme being prime examples of that. And then also we have examples of business-led programs where you have collaboration between shippers and their contracted logistics providers on a voluntary basis, where they come together and recognise the efforts on a mutual basis, in order to work together and show their leadership in this area. So in terms of actually why we calculate emissions, I've already said that we believe that those businesses that calculate and report their emissions are in a much better position as a business to understand actually the impact on their business and to take action. That requires transparency. Even internal transparency for decision making in many companies doesn't necessarily exist. And so providing that transparency is a first step. It allows you to identify where the emissions hotspots are in your supply chain, and to think about actually what you can do in order to reduce the use of fuel, maybe change fuel type and target those hotspots where the emissions are occurring. And then use that information to improve your decision making. And that's very much to fulfill various sets of expectations, whether it's internal, your customers, or external stakeholders. And that's where the link back to maybe voluntary or possibly mandatory reporting and legislation comes in. Until about 3 or 4 years ago, it was very difficult to actually reliably compare the basis on which emission calculations were being made. There were many stories of shippers who were requesting emission calculations from their suppliers. They would get information in and realise that actually the basis of the calculation wasn't transparent. They could tell it was being done on a different basis, and therefore they weren't able to actually use the information requested in order to actually make any decisions, resulting in the efforts that were put into that being wasted. Examples of how that was being done in terms of different forms of reporting, annual logistics surveys at a national level, corporate emissions inventories. We now have in France the legal requirement to report emissions for any transport service. We're now also seeing customer requests. One of the GLEC's founding members, HP, has actually started to mandate customer requests within its logistics contracting, so that if people or its suppliers aren't able to provide emissions results in a specified format according to the GLEC framework, making carbon reporting an absolute requirement within a corporate procurement process. HP, one of the core GLEC members, has implemented this as part of its procurement, requiring companies who wish to do business with HP as a logistics provider need to report according to the GLEC framework. And similarly, I mentioned previously voluntary reporting through a platform, CDP. They have up till now been based on reporting of overall total carbon emissions. They are now diving down into different sectors, and they're beginning to ask for businesses whose primary role is in the transport sector to then provide indicators and values which link directly to their freight transport activities, and again are linking that to the GLEC framework. And that takes me on to what the GLEC framework is. It was published in the middle of 2016, and it basically brings together the main established calculation and reporting methodologies for different modes, and then actually extending that to transshipment centres where goods are transferred, maybe held in warehouses, and bringing those together in a consistent format, so that it is possible to calculate emissions along a transport chain, or maybe to compare the emissions if you're looking at opportunities to, or different options to transport by different modes from point A to B. The idea being that a total multi-leg logistics chain can be calculated in a consistent way from starting point through any handling point to the end. And we have backing from Greenhouse Gas Protocol for this. We follow IPCC guidance. We have input from the vast majority of the main existing green freight programs, and are aligning more and more with different reporting platforms and other initiatives across the globe. And that ties in with the work that we're doing specifically within the LEARN project, which is a European Commission funded project, which again, its starting point is around the logistics emission calculation and reporting, but takes that through data assurance and onto the way in which the information can be used for logistics decision making. We use the GLEC framework in its 2016 version as the starting point for all of that. And then we've been working to develop that further. So one of the current activities at the moment is to develop what we're calling a GLEC declaration, which is basically a common template for the reporting of emissions, both on a business-to-business level, so from logistics service provider to customer, but also from business to other stakeholders, so maybe public reporting or reporting to policymakers as well, to help track overall emissions targets that are set at country, regional or global level. And that really provides the opportunity for use of similar information so that logistics service providers, other transport companies and shippers only need to produce the information once in one format, not in multiple formats, so that it can then be used by a wide range of different types of initiative for onward use, whether that's in a product eco-label or, as I say, for tracking or reporting to investors. Within LEARN, there are various different other aspects being taken. This webinar forms part of a training work package. There's also work on informing policymakers, looking at how standards can be improved and globalized, and a lot of effort on networking, bringing different types of stakeholders together and vastly increasing the awareness of this and providing an information resource. That work's all ongoing, and we have an international workshop scheduled for Brussels in February next year. So if you want to hear not only about methodology and reporting, but also the work that's going on in all those other areas as well, then do please get back to us, and you can find out more about that workshop separately, but we don't have time to discuss in detail here. I believe that the full agenda is, if not already published, then it will be in the next week or so. I already mentioned the GLEC framework providing consistency across modes and transshipment centres. A few points to note about actually the principles behind it. It requires reporting of full greenhouse gas emissions, so CO2 equivalent and not just CO2 itself. It requires the reporting of the full life cycle of the fuel, so taking into account not only the emissions at the point of use, but also the emissions that are inherent in the production of that fuel. And that's really important when it comes to considering one of the key policy aspects that's being pushed at the moment, which is a change either to alternative fuels, low carbon fuels, or to electrification, because it's really important to understand the full impact and not just taking away emissions from point of use and just shifting them to somewhere else within the economy. It's really important to consider operational factors within that and the KPIs which can be used to assess that, and that's an important part later in the webinar. And we really focus on trying to encourage people to use real operational data to understand actually the total fuel that is actually used in the vehicles and the amount of freight transportation demand that is provided by the service. This isn't necessarily always easy for the customer of a service, so the shipper, to really get firsthand. And so what we also do is provide a database of default consumption factors expressed either in fuel per ton kilometre or in a standard emissions per ton kilometre format, for examples of different transport services. That can be useful as a first step on the road to better understanding your emissions. But whilst that is made available, we would encourage people always to, if they start with that, to then think about actually how they can improve the flow of information and get to more operational values in due course. In terms of responsibility for emissions, the Greenhouse Gas Protocol talks about what they call 3 scopes. And we put a little graphic together to try and explain that in day-to-day terms. Scope 1 is the emissions that you are directly responsible for that occur at the vehicle. And that would be the case of emissions that occur when you drive your own car. That would be the red car in the example there. If you change to an electric vehicle, then the emissions really come at the point where the electricity is produced. So you don't necessarily see them or aware. As we know, many different carriers, particularly in the road sector, all responsible for the emissions of their own individual vehicles, either as scope 1 for conventional fuels, or if they're already starting to electrify, reported as scope 2. They all work individually, performing the services that they're contracted to do, in competition potentially with each other, alongside each other. If they are subcontractors to a much bigger logistics service provider, then they count as the scope 3 emissions for the logistics service provider, which may also have its own vehicles, which it also needs to report as scope 1. And these all then count effectively as the scope 3 logistics emissions of the shipper, which may also then have its own scope 1 and scope 2 emissions as a result of the manufacturing of the product. There are some quite clear rules about actually those emission scopes. Effectively, any emission must have a direct owner. So that counts as basically scope 1, and it avoids any emissions being left out of the overall supply chain. At the same time, any emissions can only have one scope 1 owner. In order to avoid double counting. And then an emission can be listed as indirect, either scope 2 or scope 3, by multiple different organisations because of the complexity of the supply chain. And that's very much to show potentially the overall complexity and to show the impact of businesses and the broader impact of businesses. And as I say, that's highly relevant to logistics operations because of the amount of subcontracting. Moving on to actually how you calculate your emissions. In a sense, it's a relatively simple process. Because if you know the amount of fuel that you use, all you need to do is to multiply that by the emission factor for that fuel. Total fuel would be, for a logistics chain,
the amount that's used by the vehicles, plus the amount that's used in any handling along the supply chain, plus any emissions linked to IT, office services, etc. And you get your fuel data from any potential source that is available to you. Each fuel has its own emission factor, so it's really important to list out the amount of each fuel that is used separately, so that you can then perform a calculation for each fuel within the supply chain on an individual basis. And if we were doing this as a face-to-face training, there would be an interactive example where you would have 10 minutes to do a calculation. Unfortunately, on the webinar, that's not an option. So what we have, which is a table which you can go back to and look at in more detail at a later stage. But basically, for a situation where a company is using a certain amount of diesel in its vehicles, maybe electricity could be used both for some vehicles at the moment and also for cooling of a warehouse, and also maybe some gas for some heating and potentially also in some vehicles. Breaking out would be different amounts of fuel that are used, and by using the emission factors for the different fuels that are within Scope 1 and Scope 3, you can come out actually with the total emissions, both for each individual fuel within the supply chain and also within each individual scope. So you can see the direct and the indirect emissions by scope, giving you a total emission for a company as a whole, which in this example is primarily focused on the emissions that come from the diesel fuel used in the vehicles themselves. As I say, this is an example, not necessarily based on the reality of any individual business, just to share the calculation. To give a quick further explanation, the value 2.67 in the box top left in terms of the calculation is the emission factor of diesel at the point where it's burnt, and the value 0.57 is the emission factor of the diesel related to the fuel production that's already embedded within the fuel before it reaches the point of final combustion. And what these scope rules do is they increase the chances of fair comparisons. And to give some examples, if you consider a company that is reporting its annual emissions on the basis of that previous example, tracking its emissions use year on year through 2012, 2013, 2014, not much is changing year on year. There might be a slight change in the amount of business that it's doing. And then in 2015, it's made an investment electrifying its fleet. And if it were not doing a full welter wheel evaluation, then the emissions that it was reporting would actually appear to be much lower. The blue bar, the residual amount of diesel in its vehicles, would appear much less. But actually, because the emissions of the electric vehicles are embedded in Scope 2, it's really important to include that with an accurate figure of the emissions that come from the electricity generation, so that you can understand the ongoing comparative impact as a result of making that change. And I think at this point it's also really important to emphasise that there are quite different emission factors associated with electricity generation between different countries as a result of the way that they generate their electricity. And those countries which have invested in hydro or nuclear electricity have a fairly close to zero carbon electricity system, whereas those countries which still rely on coal power generation, the reduction due to electrification on a full emissions basis would not be significant, as shown in this example. It also gives the opportunity to compare different companies. In this example, it would appear that company Y is a much lower emission producing company than company X, providing effectively the same service. But what's important to understand that this actually only includes Scope 1 and Scope 2 emissions. And if company Y, in fact, is purely subcontracting its transport operations, then the reality is that unless you report Scope 3 subcontracted emissions, you don't actually see that basically the same service does actually result in the same emissions. And that's one of the reasons why within the GLEP framework we really insist on full scope reporting. So in terms of emission accounting, is that all there is to it? Well, in a sense, if you just want to calculate a total company figure, the answer is yes, it is. But what if you want to actually take action? Does that total company figure give you enough information to do so? If you want to report to other stakeholders, in terms of reporting the overall impact of your emissions, then that's a good starting point. And it would enable them to start tracking the overall impact, potentially of policy measures. But if your customers want to work with you and take action, then there is a need to really drill down much more into the data that you have. And that's what I want to focus on now. And one of the key things to emphasize is that the typical indicator that is used by transport operators, which in a metric system is litres per 100 kilometre, or in the UK would be miles per gallon, is actually a really poor indicator for this. What it does is basically tell you, yes, your vehicle efficiency for the vehicle driving around, but it doesn't link into actually how efficient the overall operation is, what level of empty running there is, which as an operator you would want to minimise. It doesn't take into account the level of loading of your vehicle. And in fact, you would find that empty kilometre would give you a better figure on according to this indicator than if the vehicle was fully loaded, which is completely the wrong way around. It doesn't also tell you things like whether you have efficient routing or not. So there are many ways in which this indicator, which is commonly used, needs to be improved. What's a much better indicator of fuel efficiency is actually, and your overall company efficiency, is your litres per tonne kilometre. This basically includes all fuel used, but it takes into account the extent of loading and the empty running, which reduces your overall efficiency as a transport operator. And it also matches up to the international statistics and the customer requests that are more commonly used. Policymakers who want to track the impact at global level are going to be wanting to know emissions per tonne kilometre as well as the impact on total emissions. And what I wanted to do very quickly was comment on the fact that sometimes tonne kilometres can trick people in terms of an indicator, so it needs a little bit of concentration in order to make sure that you calculate it correctly. You need to actually understand very clearly the activity that is being provided leg by leg within a transport system. So we have an example of breaking that down as an operator, journey by journey, understanding actually what the load is, the fuel that is used on an individual leg and the distance that is transported, but also including the mileage that is conducted on any journeys that are empty when you're going from one drop off to the next pickup, or if you're travelling back to base empty. It's very important to include those. And then to actually calculate the ton kilometres for each individual transport leg, so that for the first one, you're transporting 18 tons over 200 kilometres, giving you a total ton kilometre for that particular leg of 3,600. And then adding those individual values up to give you your total ton kilometres, adding up separately the total fuel used, and then using those individual values to give you what we're calling a consumption factor, which is your litres per ton kilometre. Again, we have example values here. You can maybe question whether those values are entirely representative of your operation or not, but for an example purposes, they're within scope of what might be applicable to certainly certain types of operation. But linked to this, you can also get at your empty running value and your load factor when you're loaded, which are also indicators which are directly relevant for many carriers already in the sort of operational monitoring, and can help you understand the efficiency of the way that your activities are happening.